Joining us right now is Altium Wealth Management Portfolio Manager and Market Strategist, Michael Lee. Great to see you, Michael. Thank you so much for joining us. Good. Big report. What are you expecting in terms of its impact on markets?
I expect good numbers today. Yeah. I don't know how good a numbers, but we had an ISM number yesterday. It was the second highest ever recorded. The last time something like that happened, the jobs number was over 500,000.
Wow.
Right? I don't necessarily think we'll get that today, and I don't like predicting these jobs numbers because it's just going to get revised twice. So if you're right the first time, you're almost always wrong.
I know, but the good news has been turning into bad news, right? Because if we get a good jobs number, we're probably going to see rates go up again because markets are going to expect the Fed to continue raising rates. Does that disrupt the market? We had a big sell-off yesterday with the 10-year at 7-year high.
Yeah, so we lost 75 basis points, and what are we, 1.25% off our all-time highs? So I definitely think there's going to be some rate shakeouts, but I think that's healthy in the long run. I think that with rates this low, you have savers that have been getting crushed for almost a decade now. And so as rates are going higher, it is stimulative for the economy. And, you know, at a certain point it won't be, but we are so far away from that, I don't see any issues.
What do you think about manufacturing jobs? What do you think about some of the numbers around high school graduates? We've seen good numbers there this year. Are you looking for another good number this month?
Yeah, so the wild statistic about the jobs number that I don't hear talked about a lot is the job growth for high school dropouts. In December of 2016, the unemployment rate for high school dropouts, so the lower end, was at 8%. Now we're at 5% in August. Okay, wages for that same group were up 7% year over year versus 2% for college graduates. So what you're seeing on that level is a validation of the economic policies of this administration on trade, on immigration, on tax policy, that it's really flowing through to, quote unquote, the little guys. So I'll be watching that part of it very closely.
Yeah, I think the interesting aspect, and one of the reasons why the market has been down and struggling, is because dollar strength, right? So when the dollar's weaker, it does better for the markets. We've also seen a rollover actually in the Russell 2000 stocks, because what's happening is, one, their cost of capital is going up, interest rates are going up. Two, the cost of labor is going up, so that's certainly going to impact earnings. So how do you think this earnings season is going to shake out? Because you have those headwinds, and I'm worried about guidance going forward. I think we're going to get great earnings, but I think you're going to see very, very reserved management companies.
Yeah, I tend to agree with that assessment that I think you're going to get a lot of kitchen sink thrown at these numbers and kind of bring out the worst, because you have the tailwinds of the economic growth and the tax cut, you know, kind of helping you with the numbers. So I think a lot of companies will give very conservative guidance, come out just so they can beat next year, because you're going to be looking at really tough comps in all of 2019. But the underlying economy, like, we're on fire.
So you do expect then things slowing down in 19?
Yeah, well, it's going to be hard to top.
Or is it just a guidance game?
Well, like, it's hard to top 20% earnings growth, right? I'd say we're probably going to see high single-digit revenue growth and low double-digit earnings growth.
Yeah,
right?
22% on profit and 8% on revenue is the expectation.
Well, so the only saving grace of that is if inflation's going up and wages are going up, what do you need to save that? And you need productivity. And that's the most important thing. So we need to see productivity coming from the workers. So that could help for next earnings season, but we're not going to get that guidance yet because it hasn't been there all year. Now, Larry Kudlow thinks we're going to get it, but we need the numbers to reinforce that.
And Stephen Mnuchin as well, because I've posed this question to a number of them. Are we going to see a sharp slowdown in 19 and 20 like this narrative has been going on? And they say we don't see it. We continue to see very strong backdrop, Morgan.
Yeah, I mean, I'm really interested to know what you think on the China front. I mean, clearly this administration is not only pursuing the trade actions against China, but this is something that I think that they're going to pursue over the next 2 years through the end of the administration. So what do you think how is the market going to react to this? I mean, it doesn't seem like the president wants to get to a deal anytime soon. I think he really wants to hold the Chinese feet to the fire on IP theft and others.
And you should point out, before you answer, Vice President Mike Pence spoke out about this yesterday, explaining why the administration is taking such a strong position. Watch.
Well,
China has built an unparalleled surveillance state, and it's growing more expansive and intrusive, often with the help of U.S. technology. The United States wants Beijing to pursue trade policies that are free, fair, and reciprocal, and we will continue to stand and demand that they do. Our message to China's rulers is this: this president will not back down.
Michael.
Yeah, so China is the #1 enemy of the United States. It is clear. There was an explosive Bloomberg article that came out yesterday that laid this out, all the things that they're up to. I would expect to see 25% tariffs on all Chinese goods coming into January. Okay, that translates to about $125 billion, assuming that nobody pulls their manufacturing out of China. And as that starts happening, you could see the Chinese economy slow down dramatically, right? And, the kicker here is we're not trying to punish them. All we're trying to do is get them to open up their markets, which is ultimately to their benefit. So I think this will resolve itself, but you're dealing with a communist country, and the communists, what do they want? Do they want prosperity or do they want power?
But they're closing in even more. It's not like Xi has opened up and continued this liberal trend that they were in for the past 15, 20 years. If anything, they're regressing. And they continue to be very belligerent to us, not just on the trade front, but especially on the national security front.
Yeah, it's not just opening markets. It's also stealing our intellectual property, forcing the forced transfer of technology, and also dominating in terms of national security in the South China Sea.
We shouldn't be surprised by this. This is their 2025 plan. So they've been actually pretty transparent on that. They want to be the leader. That's why they've denied us a lot of the transactions, whether it's Qualcomm. But I'd like to note that Lenovo was down 15% yesterday. ZTE was down 11% today. Chinese technology, it's a bloodbath over there. So Xi may get pressure from some of the aristocrats.
I think the only way that Xi loses power is with the popular uprising. And if they go into a massive recession because of a global trade war against them, that is the only possibility. So it may be easier for them to get into a military confrontation than a dragged out trade confrontation.
I don't know. Dictator for life. I don't know if it's going to be so easy to get him out, even with protesters. Real quick,
Chocolate cake, that's how you get him out.
I saw a story that the Pentagon buys certain parts for our military weaponry from China. China makes them. I don't know how much you know about that, or if that's a concern to you. I want you to.
They haven't fully. I don't think the Pentagon has fully came out and commented on the Bloomberg story yet. But all I know from the public information is that it seems like a lot of people were buying from these from this chip manufacturer in China. And if so, that's a problem. Remember that we've seen for the past 7, 8 years how many times has the Chinese government hacked in and stolen all the information of myself and others who have held security clearances. So they've been belligerent and aggressive towards us, and why we've been asleep at the wheel as it relates to China before President Trump is beyond me. But one thing I'd point out that Jack Ma said that I think was correct. Jack Ma said this isn't a short-term thing between the U.S. and China. This is something that's over the next 20 years as one economy tries to supplant another. And I think he's right.
Yeah, I don't think there's any chance of the Chinese ever supplanting us economically. You can't do it unless you open your markets. And for them, they will simply never give up the power. That doesn't mean they can't advance. But until you're a free and open economy, you can't. There's always going to be constraints.
We got to jump. Michael, good to see you.
Thank you
so much. Michael Lee.